Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. Global credit watcher Fitch says Philippine growth remains on track, but warns that trade and political risks could shake investor confidence. Manila presses for a fair deal with Washington as President Donald Trump grants 0% tariffs to Thailand, Malaysia, and Cambodia. President Donald Trump raises eyebrows, hinting at a third term despite the two-term limit in the U.S. Constitution. First, let's take a look at how global financial markets performed overnight. Wall Street hit new records for a second day as optimism over a possible U.S.-China trade deal and expectations of a rate cut kept investors buying ahead of big tech earnings.
We have the Fed on Wednesday with another rate cut. We have Trump-Xi meeting on Thursday in Asia, and we have a third of the S&P 500 reporting earnings this week, with 5 of the Mag 7. But what's really contributing to the positive sentiment in markets today is the positive commentary from Treasury Secretary Bessent yesterday related to the framework for a really good trade deal on Thursday for Trump and Xi to agree to.
The Dow Jones Industrial Average rose 0.7%, the S&P 500 up by 1.2%, and the Nasdaq up 1.9%. Over in Europe, markets closed higher. The UK's FTSE 100 up by 0.1%, Germany's DAX up by 0.3%, and France's CAC 40 up by 0.2%. Global credit watcher Fitch Ratings says that the Philippines is still holding its ground, with 2025 growth seen at 5.6%, driven by infrastructure spending, service exports, and remittances. The forecast falls within the government's 5.5 to 6.5% target, as lower inflation and interest rates help support sentiment. But Fitch warns that global trade uncertainty and the flood control corruption scandal could undermine investor confidence and delay recovery momentum. The credit rater maintained that the Philippines' BBB investment grade rating with a stable outlook, citing solid medium-term growth prospects. The government remains confident that third quarter GDP, due out on November 7, will stay on track as private consumption and investments continue to pick up. And on the fiscal front, the national government just raised 25 billion pesos from short-dated securities, beating its 22 billion target as yields slipped across the board. The Treasury said rates were lower than both last week's auction and prevailing secondary market levels. The 91-day T-bill averaged at 4.858%, while the 182-day and 364-day tenors settled at 5.044 and 5.093%, respectively. The auction comes as Fitch Ratings warns that external pressures are eroding fiscal consolidation across the Asia-Pacific. The Finance Department is pushing a tax relief measure to increase non-taxable income, covering allowances, medical aid, and other work benefits. But economists and labor leaders warn that the proposal offers only limited relief at a time when household costs keep climbing. Paolo Barcelon has the details.
President Bongbong Marcos recently announced a new proposal to increase tax-free benefit limits for certain allowances given to public and private sector workers. Under the proposal from the Finance Department and the BIR, the tax-exempt limits for benefits such as rice allowance, Christmas and anniversary gifts, medical assistance, and the like would all be increased. In a statement, Finance Secretary Ralph Recto said the proposal aims to help workers by increasing their take-home pay. Tax expert Mona Brea welcomed the move, but pointed out that its implementation depends entirely on whether employers will choose to follow it. Abrea added that a better move would be to increase the yearly income limit exempted from income tax, a proposal already filed in the Senate by Senator Win Gatchalian. Under the Ginhawa bill, the personal income tax exemption caps will be raised to 400,000 pesos per year from the current 250,000 pesos set under the Train Law. Abrea also suggested another way for the government to help workers by reducing the value-added tax rate from 12% to 10%.
We consider reducing the VAT kasi that will reduce significantly prices. Kasi talaga ang VAT pinapatong sa presyo ng lahat ng bilihin. So from 12%, if we consider reducing it to 10%, yes, probably there will be not more than 200 billion but 100 billion plus potential revenue loss.
The Trade Union Congress of the Philippines, meanwhile, wants Congress to review tax exemptions and to make wage increases legislated, especially for minimum wage earners.
Kaya walang ibang substitute for the fact that almost all of our minimum wages are below the poverty threshold, but raising them through Congress, no? Hindi na yung through regional wage boards. Kasi sawang-sawa na kami dun sa barya-barya rin eh. At hindi rin nun matatakpan yung kinakailangan na 200 pesos wage increase.
The group plans to refile in the lower house a bill seeking to raise the minimum wage by 200 pesos once session resumes. Paulo Barcelon, Bilyonaryo News Channel.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on how Asian markets are doing this Tuesday morning. Right now, I'm seeing a mixed picture. The Nikkei 225 is in the red, lower by 0.5%. Hong Kong's Hang Seng Index in the red, down by 0.3%. Shanghai's Composite lower by 0.1%, while Singapore's Straits Times Index is up by 0.5%. Here at home, the PSE Index extended its slide Monday as a weak peso and the upcoming 34 billion peso Manila IPO drained liquidity from the market. The main gauge fell by 52 points or by 0.9% to 59.34, its third decline in 4 sessions. Analysts say investors remain cautious as the peso continues to hover near 59 to the dollar, its weakest level since late 2024. At the same time, the payment deadline for the Manila offer has soaked up cash from local traders and funds. Economists also note that lower market liquidity and the voluntary delisting of 8990 holdings this week are further reducing market depth and investor interest. Taking a look at the main gauge right now, as of 10:11, the PSE index is trading to the upside slightly, but still below the 6,000 mark. We are at 59.42, up by 0.1%. The broader all shares index up as well, slightly up by just 0.1% to 35.85. Taking a look at the sub-indices, the financials and the services counters are in the green, whereas the industrial holding firms, property and mining and oil counters are limiting the market's current advance. Total volume is at 108 million shares, valued at 388 million pesos. Market breadth is positive. We've got 66 advancers, 54 decliners, and 47 stocks unchanged. Taking a look at the currencies, the peso opens at 58.90 against the dollar, unchanged from its previous close. Now here's a story turning heads and testing trust in the market. A land deal inside the empire of Manny Villar, one of the Philippines' richest, is raising eyebrows for all the wrong reasons. Last year, Golden MV Holdings, part of Villar's group, bought land for about $93 million. Just 6 months later, that same land was revalued at $23.3 billion. No major development, just a whopping 25,000% jump in value. Investors weren't buying it. Valuation firm eValue Philippines put the land at over 1.3 trillion pesos. But the external auditor, Punong Bayan and Araulio, the Philippine member firm of Grant Thornton International, refused to sign off. The Securities and Exchange Commission later ordered eValue to explain how it arrived at that number. Insiders say the appraisal looked like someone used top BGC or Makati CBD prices on what's still mostly undeveloped land far south of Metro Manila. One market analyst put it bluntly, "That's not a valuation, that's a hallucination. You don't become richer than SM or Ayala overnight without real assets, real revenue, and real transparency." For context, at that price tag, Villar land would have been worth more than SM, BDO, SM Prime, ICTSI, and even Meralco. In fact, its paper value would have exceeded the worth of banking giants BDO and BPI combined. So, trading was halted, and after audit pushback, the book value reverted to cost, slashing the paper number by about 99%. This is Manny Villar's flagship mega development, Villar City, a 3,500-hectare estate south of Metro Manila. But the controversy over its paper valuation continues to test the credibility of our market. The SEC imposed 12 million pesos in fines over late and misleading filings and says more action could follow. The company, however, insists that it acted in good faith and that the audit is still underway. Analysts are calling this a wake-up call for market integrity, a reminder that valuations need to be earned, not imagined, because trust is the currency of the market, and right now, that's being tested. Vietnam trades over $1 billion a day. The Philippines just about a tenth of that. Investors say confidence depends on trust, and trust depends on transparency. The PSE suspended trading after the company failed to file its audited reports on time. Soon after, the SEC, under its new chair, Attorney Francis Lim, launched its investigation. This is now a major test of the market's credibility and of what true value really means. In business, real wealth isn't what's on paper, it's what you can see on the ground. So we ask, what's really being built here? A city or a story? Now, the Philippines is still pushing for a fair deal, continuing talks with the U.S. to secure tariff exemptions for key exports. PCO Undersecretary Claire Castro said Manila is seeking to protect products like coconuts, pineapples, sugar, cocoa, and semiconductors, industries that employ millions of Filipinos. She stressed that discussions on trade rules and non-tariff measures take time and can't be rushed if the country wants lasting benefits. Philippine exports to the U.S. have been facing a 19% tariff since August. The talks come as the U.S. granted zero tariff access to select products from Thailand, Malaysia, and Cambodia during the ASEAN summit in Kuala Lumpur, leaving the Philippines under pressure to catch up. As regional trade dynamics shift, the Philippines is being left out of the action. Washington has just reinstated 0% tariffs for Thailand, Malaysia, and Cambodia, but nothing yet for the Philippines. The move puts local exporters at a disadvantage, just as growth is slowing and investor confidence remains shaky. Joining us now to break down the impact is Alex Escucha, a fellow at the Foundation for Economic Freedom. Hi, Alex. Thanks for being here with us.
Thank you for having me again, Maiki.
Okay, Alex, as our own growth momentum is fading, the Philippines has been excluded from a new U.S. tariff rollback, giving several ASEAN neighbors a fresh edge in trade. Of course, our side of the negotiations are still ongoing, but as is, how significant might this development be? And what does it mean for the Philippines in terms of trade, competitiveness, and market access?
Well, it would be best to look at it as a continuing story. The story involves Thailand, Malaysia, and Cambodia. Two clarifications. One is that they are not zero on everything. They are given zero tariffs on selected products in exchange for zero tariffs on selected U.S. products, mainly agriculture, like aerospace, also for Malaysia. The same story shows that Indonesia is also in the process of holding its own negotiations, and presumably the Philippines also in the same process. The one thing that held up the Indonesian negotiations was because there was a government shutdown in Washington, if you remember. So I think that sort of held up all the others. In other words, nakapila lahat yan eh. So I don't think all these agreements can be done in one blow, in one event. So I'm sure there are ongoing negotiations, and that, as mentioned in the PCO briefing, the electronics industry appear to be part of the negotiation. And one possible sticking point based on the information that I have is that the US is asking for zero tariffs on US agricultural products, which could be a sticking point for us. If you recall, the last time the US asked for zero tariffs on US cars, we agreed because it really didn't matter because the Chinese auto manufacturers are outcompeting them anyway.
All right. Well, every country has its own set of tariffs. Alex, what is your take on this and how this development and how it's unfolding? What might it mean for us, and what does this say about us?
Well, each country faces, again, where you stand depends on where you sit, and it depends on the structure of where we're coming from. So Malaysia, Vietnam, and Thailand have a relatively higher manufacturing base at 20 to 24% of their GDP. Ours is lower at 14%. And our biggest export overall is electronics. So that is what we are trying to protect. And in the first round of announcements of Trump, he made it clear that in general, electronics exports would be more or less exempted from the tariffs. And I expect that if they will not continue to be exempted, at least the tariffs will be minimal going forward.
Okay, Alex, you mentioned manufacturing. Philippine manufacturing now accounts for 15.7% of GDP, down from 20% a decade ago, while Vietnam and Cambodia are above 24%. Why has our manufacturing base continued to shrink?
It's a function of basically being uncompetitive. Even from 50 years ago, our manufacturing base has been described as basically an import-dependent, import-substituting manufacturing base. Remember, in the 70s, we had the Ford stamping plant and few of the basic manufacturing. All car assemblies have now been centralized in Thailand because of the ASEAN free trade. It's no longer economical for these manufacturers to put up assembly plants in each country to serve a small regional market. So it's the dynamics of the economies of scale, but in general, the key reason would be that we have been the environment for manufacturing has been relatively uncompetitive, burdened, for example, by higher than average energy costs, and the regulatory environment has continued to be a constraint. The ease of doing business, which we monitor in the Foundation for Economic Freedom, has always been a major constraint.
Okay, a lot of constraints. GDP, Alex, Q3 GDP is going to be out on November 7. That's seen at about 5.2%, dragged down by the typhoons and, of course, the flood control scandal. How much damage has all of this done, you think, to investor sentiment?
Well, the GDP, the one component has been that agriculture continues to grow at only in the 1% range, because we always have a perennial problem, water. We either have too much of it or we have too little of it, and that affects agricultural production. In addition, because the 2026 budget, because of the uproar, the President and DPWH has slashed the flood control projects by at least 240 billion. And in our last conversation, we said that easily if 1.5 trillion of infrastructure projects representing 5.5 to 6% of GDP was being spent 2023 to 2025, but half of it is lost, then your real input is only really 2.5 to 3%. So by slashing the infra project significantly, it doesn't really impact the GDP growth significantly, because what was last was the one that was get lost or stolen anyway, because the proof of that is that the increase the rise in the GDP, the infra to GDP spending from 1.5-2% to 5.5 to 6%, did not really result in the acceleration of GDP growth. So that's the proof that a lot of it was leakage.
Yeah, so you're saying the cut is warranted given the leakages. Okay, so Alex, taking a look at the softer growth momentum and the cuts in spending, do you think that the Philippine economy can still hit at least the lowest part of the government's full-year target for 2025? GDP target, 5.5 to 6.5%, that's the target for the government. Do you think we can hit at least the lower end of that band?
Well, it's probably a little bit lower than, I think they have adjusted already to closer to 5.2, 5.3. The consolation is that despite that, at 5.4, 5.5, it's still running second to Vietnam in terms of growth. But it's no consolation to me because our ambition 2040 says we should be growing by 8 to 10% to reach upper middle income. But that is no longer attainable given current trends.
Okay, all right. Thank you so much for your time. Alex Escucha, a fellow at the Foundation for Economic Freedom.
Thank you.
On another front, motorists are in for a rough week as oil companies roll out a big-time price hike across all fuel products. Gasoline prices are up by 1 peso and 20 centavos per liter, diesel by 2 pesos, and kerosene by 1 peso and 70 centavos. Industry sources say the latest round of increases is driven by global market jitters amid new sanctions targeting Russian oil. Now turning to news from the United States, U.S. President Donald Trump is again raising eyebrows after suggesting he might seek a third term despite the constitutional two-term limit. At rallies, Trump has joked about Trump 2028 and said he would love to do it, refusing to rule out the possibility.
I would love to do it. I have my best numbers ever. It's very terrible. I have my best numbers. If you read it, am I not ruling it out? You'll have to tell me. All I can tell you is that we have a great group of people, which they don't.
Some allies claim they are exploring ways to circumvent the 22nd Amendment, which bars anyone from being elected president more than twice. Constitutional scholars, however, say such moves would be illegal, noting that the 12th Amendment also blocks him from running as vice president. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us and keep it here on BNC, the Bilyonaryo News Channel.